What's happening, guys? Another Sunday scan coming at you. This time is for the 12th of July and the week ahead. We've got a lot of great action happening in the markets. It's, the comment, the question that I get a lot is, what inning are we? And I'm telling you, we're still low innings, in my opinion. As you saw last week, I mean, even Friday, couldn't keep up with the amount of runs that were happening. I mean, it was just one after another, and these low floaters, these micro caps. I mean, micro floats rather, COHN, CARV, great longs this week, and even better shorts, right? There was great opportunities on the short sides. I got a little bit of it, but not quite the meat of the move. But, still really, really nice opportunities. And you can't ask for much more. SGOC on Friday. The stock was 2 to 3, 4 to 6, 7, 9, 12, 15. I don't even know what it went up to, 18 or something like that. Just incredible moves. And so I still do think that we're relatively low in innings. I still do think that there's going to be a crazy opportunity for the next year or two. Everybody's always asking, how long can this last? Who cares? Who cares how long it can last? Just come prepared and get ready for the day. And like I said, the last scan and the scan before, the higher things go, the better shorting opportunities there are. You can't just make money on the upside, right? You can also make it on the downside. So, be prepared. But I'm not wishing this away. I don't care. I don't. I'm not one of those this doesn't make sense. How can it keep on going? Anytime that I do that, I'm probably on the wrong side of the trade. So, but we did have a nice little reset this week. TQQQ, nice unwind with the market, nice unwind, and then bam, right back up like nothing happened. So we've seen that a few times where it's like, all right, maybe this is the time. It does it, flushes out, comes right back. So again, great opportunities, great action, and things are just continually trending and growing, and the momentum is not going anywhere. So, like I said last week, giveaways, as you guys know, you just have to leave a key takeaway. Leave that key takeaway with the timestamp. It allows other people to go back, check it out, and then like the video. That's all you got to do. And then I pick winners. This week's t-shirt, Lauren Lopez. So contact me, webmaster@investorsunderground.com, and we'll get you a t-shirt shipped over. And like I said, Icon Meals, which is what I use every single day for my meals to keep me consistent. Like I've preached, consistent eating, consistent working out, consistency in the market. Tim Tolson, as long as you're US based, you've won. If not, we can send you something else. But you've won that for this week. And like I said last week, next week is Scans, SCANZ, and we'll be giving that one away as well. So let's get right into the discussion this week. And one of the things, I often joke about taking time off because, as you guys know, it's hard for me, and I get anxious when I'm away from the computer, and you miss out on opportunities, and it's okay. I'm over the fact that I'm going to miss all these different opportunities. But what the thing is when you do take time off, and this is why traders get better the more that they're at a computer, the more screen time they have, is because you're seeing things that you might not necessarily realize that you're applying to the trade, right? So you see a particular key level on Tuesday. You remember that on Thursday. You see a particular way that it moved on Tuesday, and you remembered on Friday or last week, whatever the case may be, and you're utilizing that information that you saw while you're on the computer to make the trade in the following day, week, month, whatever the case may be. It could even be months. You remember how it traded on a particular day. You remember that they did a particular trap or a particular move. And so that is the hardest thing about taking time off. So the proper way, in my eyes, to take time off is to, look, you do have to get away. And like I said, that's the hardest thing for me. That was a goal for me for 2021 is to, get off the desk a little bit more, which I've done better at. But you have to review. You have to review the trades. You have to see how they reacted. You have to see how they ended on the day. So each day you have to have sort of this digest, this finalize, okay, what happened today? How did it react? What did it do? How did it finish? And by digesting that information, it's going to help you with the next day or the next week, or whatever the case may be. So it's not going to get you all the information that you might necessarily see intraday, but it's going to get you the information to make better decisions the following day. For me, if I'm not there, I feel a little bit lost. I don't know that this felt super, super heavy the day before. I don't know that this was super, super trappy the day before. And whether you want to admit it or not, that information is gold. Not whether or not you want to admit it, whether or not you realize it or not, it's gold. And so the proper way, in my eyes, to get away and take time off is when there's a lull, go for it. Do it. For me, if it's nice out, my goal is to get off desk during the summer, just because I do work pretty hard, a lot. And so if I do that, I have my screen recording if I wanted to go back and see something. But for the most part, I'm just going back and looking at charts each night. And that allows me to get prepared for the day ahead, and so on and so forth. So that is, in my opinion, the proper way to take time off. A couple things to remember, especially in this market. Trash is trash, right? And we often forget that. All these micro floats that are going nuts, we all want to catch the next one. We all want the next move. And what happens is we, chase, take this trade, it's working great, and then we want it to be like the last. And again, like I talked about last time, you're chasing that black swan. You're chasing the trade that 90% of the time is going to fail, right? So your probability is out of check. It's out of whack. So just remember that if you are trading trash, treat it like trash. Be safe, take the trades, move on. Don't try to say, well, the last one did this, so maybe this one does too. Take the opportunity, move in, move out, move on. Volume always trumps all. And I had this with the GALT, G-A-L-T comment. So I knew it was going to be a nice opportunity for a full day fader. But saw it kind of trapping, saw a lot of volume. What you'll notice is, we talk about this a lot too, and I don't mean to repeat it a lot, but it's such important information, and I see people doing the same thing over and over and over. And just like I told you guys one time, my broker told me when I was doing the same thing over and over, expecting different results. He told me to look up that definition. And when I realized that he was calling me insane without calling me insane, it was an aha moment for me. And same thing with these pre-market trades, where there's this outlier volume. You've got this nice 7 to 8 a.m. type potential trade, and then it starts to trap. And then you feel like you're going to miss the trade. You want to get in there at 9:31 a.m. and you've got your blinders on, and you're not able to make the trade that you should. So GALT made shorts feel really uncomfortable. There was a point there where you could tell that shorts were very, very nervous. And at that point, we had that stuff move, failed follow through, and then that was it. And it was that point where if you were short, there's a good chance you would have been part of that big exchange, that stuff move, and you would have bailed on the trade. So that was a great example on GALT. You can go back and see how it looked on the intraday chart. But again, it's really about be patient. Wait for the trade setup. You don't need to get the top prints. You're talking about a dime that you missed out on, but there's a better chance that you lost 20 or 30 cents getting chopped up because you were afraid to miss that dime. You could have been a dime late and got the 30, 40, 50 cent unwind. Low floats, microcaps, cone, carve. These ones were great opportunities, and kind of thinking about big picture, right? Big picture, what works, right? So we talked about all these junk IPOs that were working. If you're going to be taking swings, big picture ideas, you need to know why they're moving. You need to know why they were working. And if that stops working, you've got to make adjustments. And the same thing, cone, carve, all these things. I believe that carve actually was moving because it was the closest thing to a micro float as NEGG, right? NEGG went from 10 to 80 or 70, whatever it was. And so people started to scan for micro floats, stocks that had maybe 500K float, 1 million float, maybe 1.5 million float max, stuff like that. And so they stumbled upon carve. But CARV started to bring back the Black Lives Matter index, right? As we call it, because as we were going into Juneteenth and any really Black Lives Matter movement, there's been volume and upside and trends in all of those stocks, which is, CARV obviously, but it got UONE going, and OPHC I think was another, LMFA, and all these other names that all were going with each other. So you got to kind of dissect where that's coming from and why they're moving. And so if Cone and CARV continue to stay strong, these other ones might have nice bits. However, what I want to look for is relative weakness. Relative weakness. Just like we look for relative strength. This thing should have died. This thing should have pulled back, but it's hanging on. Maybe shorts are trapped. I want to be watching UONE. And if it starts to fade off radar and people aren't watching it, and Cone is kind of doing nothing, there's a good chance that I'm going to get a nice headacheless trade on UONE, because the whole reason that it went up was not for anything except sympathy trades, right? So understanding the theme, the sectors, the reasons, the whys can really benefit you. The last note on that, there's a lot of trades that run off of other names. And, in a market like this right now, nobody's going to care about particular trades that were hot Thursday or Friday. You should, if you're a new trader. You should 100% care, because everybody is focused on that shiny object. Everybody wants to get the one that is ripping on Monday morning. They want to find that top, and they're laser focused, looking for that top, wasting their day, when they have 1, 2, 3, maybe 4 different names that are off radar, sneaking down to the lows. And we had that opportunity. GOED was a great example that I've been giving people every single day. But once it falls off people's radar, once the dip buy people become potential pop sellers, or it starts to shift, you've got a nice edge there. And so that's been a great profit center for a lot of traders, especially those that have been paying attention on the broadcast. So I asked you guys on Twitter what questions you might have for tonight's scan. I got a few good ones, so I will go over those. One of the first ones was, how long do you need to be consistent for to start sizing into trades? And really for me, it's not really about sizing in a 2x, 5x, 10x type of manner, right? Because that just expands your risk. What I want to do is be able to scale into a trade and keep my risk the same, right? How do you do that? And the best way, in my opinion, to do that is by adding into a winner. And as I've said a couple times, one, you need to know what your A+ setup is. What are you best at? What over time has given you the best risk reward? What over time have you done the best trades on? And what have you done the worst on? Those you should avoid. But the ones that you're best at is where your focus should be and where you should be scaling in. Not necessarily sizing in, because I feel like when people say, what should I size up on? They just go, instead of 1K shares, they do 10 or 1 to 2 or 1 to 5. And I think that still increases your risk. There's a way to scale in by keeping your risk the same, right? If you have good risk management. So that's really where the focus should be. But you have to find out what you're best at. What I'm good at may not be what you're best at, right? So you need to find out, are you a good shorter? Are you a good long trade? Is it this short setup? Is it this long setup? And whatever that is, whatever you do consistently over time, and it's your A+ setup, your go-to setup, that's where you should be focused. And it's not every single day. It's not every single trade. It's opportunities. Opportunities where there's outlier range, outlier volume that allow you to scale into a trade. When it's out of the channel, it's out of its typical range. That's the days that you want to be able to put on more risk and be able to scale into the trade. Next one was whether or not I trade with a trading partner, in the sense of going through ideas with each other during trading hours. And if so, do you think that this can improve you? And if you don't, do I have an opinion about it? So absolutely, I think it's very important. It's vital for me. I surround myself with guys that are way better at news, way better at bio, way better at even filings. I'm pretty good at filings now, and I review them, but there's still always some that I kind of am unsure about. So I always want to be able to bounce ideas off of people and know, hey, is this a trade what I see type event, or should I be aware of a halt? Should I be aware of this, or was this really game changer for the company? and I need to be kind of cautious and not be so biased. So things like that, I always like to bounce off, but I try to bring a lot to the table. Because you don't want to always be that guy that's just asking and never providing any value. So I try anytime, any resources that I use, I try to always offer the best value that I can. Not advice, but any good information that I can give to them that could potentially better their trade or be better information, or hey, I found this. I think that is well received, especially if you have a lot of questions. So if you're trying to do something like that, it's always better to really make sure that you're not just taking. But yeah, it's always good to go back through ideas, and you can also recheck it. Don't surround yourself with people that always are yup. The people that are always yup and agreeing with you are gonna end up confirming your bias, confirming your thesis, and never challenging it. You want to be challenged. You want people to say, I'm not sure. Even if they're wrong, it's okay to recheck in and get a different viewpoint. And there's a lot of times where I might be super biased on something, and then somebody brings up an idea like, you know what, I hadn't considered that, or I didn't realize that. And whether or not I stick with my trade, and I'm right or wrong, it doesn't matter. It's something that I might not have considered because I was just so biased in one direction, and I was surrounding myself with the opinion that I wanted to hear. And I think that's what happens a lot on Twitter, StockTwits, and social media is everybody surrounds themselves with the thesis they want to hear. If you just go back, look at some of my tweets, if I'm long a particular meme name, or if I mention it in a positive manner, retweets and likes galore. If it's the opposite, nothing. Just a bunch of replies that clowns and this and that. So it's very telling who wants to be kind of told what they want to hear and who doesn't. And for me, it's good to always be challenged, because there are things that I have not thought about that I potentially should. So you should always have definitely a team member or two that you can bounce ideas off of. But if they always agree with you, they're not necessarily helping you. Can you talk about stress management, please? So, this always comes back, same kind of thought process as the next mentality. Look, somebody's always going to make more. You don't need to try to make back losses. You just need to trade well. Everything takes care of itself over time. And what we do is we put a lot of stress on ourselves to be perfect. Put a lot of stress on ourselves to get to that next level. But as I've said, every time you get to that next level, you want to get to the next level. So we put all this pressure to get here, and then we want to get to the next and the next and the next. And guess what? It never ends. So you have to have something else that you're working towards. You have to have some other type of focus rather than monetary, because if that's all it is, you're always going to be stressed out. You're always going to be flying around. And same thing, you have to keep those losses in check, okay? Because you work hard, I'm assuming, and to give it all back in a day, an hour, give a month's worth or a quarter's worth of work back in seconds, that's not right. And so you really need to focus on making sure that you keep your risk management in check. That's what's going to keep you around for a long time. But most importantly, it keeps the stress down. And when you're sitting there and you're like, you can feel it. You can feel that you shouldn't be in a trade. Just get out. You can always get right back in. We talked about this a couple scans ago, but people are so afraid, and it's free commissions now for a lot of brokers. But if you're at a regular retail, broker with a lot more than just the E-Trades and TD, you're obviously still paying per share probably. People are so against stopping out and wasting $5, $10, $15. They'd rather sit there and lose $5,000 because they were too stubborn to stop out. So don't be afraid. If you're uncomfortable in a trade, get out, because that's just stress building up, and you're gonna make the wrong decision. And I think that's about it. as always, I always ask this on Twitter, so feel free to reach out with questions, and I always try to get at least 3 to 5 of them per week that I feel will value other traders as well. So next is going to be the scan for this week. I hope you guys enjoyed the first part, but once again, leave a like, leave a comment, key takeaway, and let's get right into it. All right, guys, so for the next part, as you guys know, not a financial advisor. So these are not buy or sell recommendations. This is basically what I'm prepared for, how I'm looking to trade. And the goal here is to get you guys in the right mindset of how to prepare for trades and what makes a good thesis and, sort of what makes good risk management and all of that stuff. So again, if you're looking for buy or sell alerts, this is not what it is, and you should probably turn off the video right now. But if you're good with that and you understand it's for educational and informational purposes only, feel free to continue. First and foremost, MTSL is going to be a main watcher. We had a lot of great opportunities over the last couple of weeks. Staff and DBGI and BRN. There's a lot of social, Twitter engagement on particular names, and they offer great longs, great traps, squeezes, and in the end, fantastic unwinds. And so the most important part is not to try to step in front of something. Okay, so MTSL, it's up after hours, it's continuing to break out, it's got a nice base that it started to form. You can see basically 570, 580s, and it's peaked out twice now, 3 times in the 650 range. Normally I look for where it's not necessarily the exact high print, but the general base and the general top and kind of how it's reacted around those levels. So for me, those are going to be the 2 key areas, probably 580, 590s, and 650 and above. So 650 and above, higher the better, ideally some type of parabolic move, looking for a stuff move, looking for failed follow through momentum. Otherwise, 590, 580s, looking for failed follow through potential unwind. I would pull up the charts of DBGI and staff to kind of see how those went. A lot of times you've got a 4 a.m. rip, followed by a 7 a.m. pullback, squeeze into the open, and then at some point after 9:45 or 10, things start to loosen up and unwind. Saba was fantastic. On Friday, I actually was wrong first, and being wrong is right, as you guys know. I did not get exhausted on the front side. I put on a little bit, as I said in the room, starter. I wanted to be there. I felt like a trade was going to be close. We got a nice unwind. I got a nice piece of the trade. And then I took that, I moved on, and I got off the desk because it is vacation week. While I was gone, BIIB had a headline, and Stat News had a report, something like that, and basically it was kind of like a negative light for the approval, and kind of suggesting that there might be more of a microscope potentially on something like Saba or ANVS and ABXL, all these different names. Whether or not that's the case, it doesn't matter. From a broad macro view, that's exactly what happened, and that's why there was pressure. So that happened when I was off desk, but I was just getting back, so I was able to come back, put some on, and as you guys saw or can see, pretty nice trade opportunity, and got the meat of the move. My goal was potential 85 to 90s as range. One of the things that I'm best at is sort of anticipating that potential range. Sometimes it's good, sometimes it's bad, because sometimes I really want to be patient for that to come, and instead of taking those huge washes, I kind of wait and end up minimizing a trade. But in this case, I got the full meat of the move, so it was pretty nice. Another one, ANY, has been, you can kind of see that we've got a peak forming here, and at this point, you can kind of see that there's a peak happening in the 380s, 380, 390 range. So ideally, we get some type of move, 350s, 360s, 370s, some type of blow-off move that I can use that 380, 390 as sort of a level of risk. I am not in a rush here, but it's the type where once it starts to fail, in my opinion, it's very, very retail crowded. It's very, very retail crowded with longs. So it has to fail. It has to fail the trend in order to start to get that unwind, but you've seen it multiple times. AHT and BBIG and a bunch of these different names that have had huge runs, and there's been some huge scores by a lot of traders, but at some point they run their course and they need to kind of puke out all the traders. And then whether or not they survive or not, that's to be determined. But they do need that kind of reset moment. And so I feel like that might be coming this week, and I'd like to be able to take advantage of that. The other three that I don't have charts up on is AMC, SPCE, and NEO. So AMC was a nice reactive trade. These are kind of my perma watch list at the moment for main traders. Wednesday, Thursday, Friday, I took trades right off the open, reactive trades, waited for the big picture moves. SPC, I think it was Thursday. I didn't touch it until late day. That was a great opportunity, but they've been great profit centers. They've been great spots to zone in and focus on. As long as there's range and volume and opportunity, I'm there. As soon as it starts to tighten up, you got to be hands off, because a lot of times you've had really good trades, then they start to tighten up and you're still trying to force that trade. But that's not what I want to do here. If it starts to tighten up the range, I'll be waiting until the next opportunity. Next is failed follow through. So as you guys know, I'm looking for, in this case, higher the better. And so what I mean by that is I'd love it to keep on going higher, because the higher it goes, the better pullback eventually. But pretty much the same thing. SGOC. We've got TPST, and we've got LHDX. All big movers. It kind of reminds me of BSQR and BLIN. Everybody wanted a piece of it, and then all of a sudden, lights are off and nobody cares. That's sort of the mentality I'm going with here. So I want to see them kind of fail to follow through, and potential unwinds when nobody's looking at them. Very similar to this RSLS trade where, there was a great opportunity. I got a nice short off the open, covered some, and it ramped back up. So I covered it, I reshorted it, covered it, and left. But you can see the type of unwind that I'm talking about. So this is the kind of stuff that I'm looking for. You should expect that there's going to be a little bit of whipsaw, 9:45, 10 a.m., potentially for the first part of the morning. But the key, the secret, is don't lose these off radar. Most people look at them the first hour, and then that's it. But you might get that nice, huge unwind. I missed this particular trade. I was there, but I covered. But that's a huge move. $2 per share. And it doesn't take much, share-wise, to make a large trade on that. So, and also no real headaches on that type of trade. So, just something to keep in mind. I think that there's a lot of money made by following the names that fade off of people's radars. Then, last one's MOXC. You guys know that I've been here for a while now. I've been here since the teens. I've been here since this day right over here. And as I've been saying, ideally we get 30 to 40s. We got that. We got the low end. We got almost 31 on Friday. So at this point, sometimes people will PM me or DM me like, hey, what do you think? Do you think I should get out here? Do you think I should stop here? What do you think I should do? Blah, 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 blah. That's not what I'm here for. I'm never going to answer that question. I don't offer any financial advice. So if you took the trade, you should have risk and a plan, a game plan before you even think of trading it. Sure, it worked. It was great. And you know what? I might overhold it too, but I'm giving it a chance to work. Playboy, PLBY, I overheld like crazy, right? So I sold a bunch before the earnings report, which is where I should have sold it all. But, I overheld that trade. And so, it's annoying to do that, but, you don't make the huge trades by always just scalping out for the first candle. So I was letting a winner work, and unfortunately I minimized that trade a great deal. I was thinking that, we potentially could get 80 to 100 on something like that. But obviously they did, some delusion, and it went to like mid 60s, low 60s. And, that's where I had sold some of it. And I was actually at 64, 66, 68, 70s that day, just in case it took off. But it just never got there. So the reason I'm telling you this is MOXC, if you ended up participating in this trade, it's a double. It's just shy of a double. So manage your risk, adjust your risk accordingly, and don't trade anybody else's plan. Trade your own plan. And, so far it's been fantastic. Ideally, we get some type of 35, 40 blow off, and it goes nuts. Will that happen? I don't know. Is there risk involved? Absolutely, especially from this level. But I'm speaking from a mid-teen, high-teen type level, and I've locked in. So be aware. Make sure you have a game plan. Don't be silly. VTSI, so far so good. This we talked about a couple weeks back. We had this huge volume bar that we always talk about, and then we had these wicks. I had talked about these wicks, and again, we've got these wicks here. So, there might be one of those days where this just loses it, right? And you have to be prepared for that. But so far, it's been pretty nice, steady grind. And that can be anticipated, can be kind of assumed based off of what we've discussed in prior scans. Currently, I don't have a position on it, but I just wanted to mention it, and I'm also still interested in potentially buying dips versus that 750 level, because you can see that there's a little bit of a base kind of formed there. MXC, sticking with the micro kind of theme, and will they go from NEGG to CARV to MXC type names? I don't know. Okay, but the last 2 days, there was a buyer in the tape. And that's all I care about. I'm looking for players coming in, interest coming in, real volume. Not just one candle because somebody tweeted on it and it ramped up and it pulled back. Even on some of those, Seeking Alpha articles, all those types of trades. I'm not looking for just one candle. If I trade one of those, I'm looking for it to wrap up, see what it does, consolidate, and if it starts to hold trend, I'm interested. I'm not really interested before that. I want to see if a new market develops. I want to see if a trend develops. And, with that, like last week, we had a lot of opportunity with things like that, where it was one big ramp, pulls back, consolidates, and then off it went. SGOC is a great example of that. Whether or not you were in the first couple candles, was there edge there? Probably not. But after that, there was a lot of edge. And yeah, sure, I bought at 4, I sold at 6. I mean, we don't have to talk about it. But, great opportunities by waiting for a trend. Not buying that first pop. Waiting for volume to turn. Waiting for trend to confirm your thesis and show you that there's an actual market there. And I think that's going to help you guys stay away from these one candle pop and drops. Because I know a lot of people get chopped up in those. So I'm never looking for that one candle pop and drop. I'd rather be paying higher after it's proven that it's holding trend. FWP, same deal as before. I'm in the market on any good flushes, and I talked about the catalyst into September. I think maybe towards August we start to see this thing firm up. Win or lose, let's assume that they lose, but win or lose, I still think that it has that UONE type of potential if and when it gets closer towards the end of August and we start to see this thing break out into that as more people pick up the story. Last but not least, SQFT. We've talked about this for quite some time. I talked about this candle before and how it was coming up. And since that day, it actually has not gone lower. It's held a continual base and started to pop on Thursday. It continued on Friday. I currently have a position in that one as well. But again, I'm not looking for, 50 cents. And, if it pulls back, I'm going to assume that it pulls back. It likes to break out and then sit right back. But I'm looking as potential of one of those that kind of gets away. It does 7, 10, 15. Same thing, MXC. I don't care if it goes to 11. I don't care if it goes to 9. I'm not trading it for that. I'm trading it for a much bigger picture. So, if you're coming into some of these names, sometimes people take a bigger picture trade and they go in with the day trade mentality, like, oh no, it pulled back 30 cents. What should I do? Do what you plan to do when you get in there. I mean, if you took it as a day trade, then you should be stopping out. If you took it as a swing trade based off of chart daily support, then you should be letting your trade work, right? So always have that plan, any trades that you take. Last but not least, I always have the staying familiar section. Oracle, TAL, there's a lot of good action. TAL was a fantastic long into the short trade, something that I've been working towards in 2021, kind of reversing that trade. If I think it's top, why am I not shorting? If I think it's bottom, why am I not going long? And quite honestly, a lot of times when I cover, had I gone long, man, there's been some great long opportunities off the covers. So Anyway, that's where my head's at for the week ahead. Again, if you have any questions whatsoever, reach out, leave a like. We still haven't got to the 1,000 likes, which, if we get there, like I said, we'll give away a bundle and a quarter. Just it's an incentive to just click the like button and help us, help you, and help other traders. Again, have a great weekend, and we'll see you in the room on Monday.